Today we'll be discussing butterfly spreads and how to trade them within Webull. We're going to start by learning what they are, how they work, and also how to manage them throughout the life of the trade. I've also added my affiliate link for Webull down below, so if you do decide to open up an account for yourself, using that link will get us both a few shares of stock completely free. But like I said at the beginning, we are going to be learning about butterfly spreads, which are composed of both a long and short vertical, with the short option sharing a common strike. So rather than trying to use these options to bet on direction, a butterfly spread is going to be intended to be a far more neutral trade, paying off the most if the underlying stock doesn't move at all up until expiration. Now, it also happens to be relatively low risk, but the likelihood of us ever getting the max profit on the trade is also incredibly low. But I know that seems like a lot, and I promise you after a few examples it's going to make a whole lot more sense. But for right now, let's go ahead and pull up an option chain. Now within Webull, the option chain can pretty much be added to any screen within here by simply coming up here to the widgets menu in the upper right hand corner, looks like a little briefcase. By opening up that menu, we can then find the sub-menus down below, and if we were to look in the quote section, we can then find and click on the tab marked options. By clicking on that, you can see it immediately adds an option chain directly here in the center of the screen, and I can actually click and drag that little option chain wherever I wanted it. But in my case, since I already have an option chain on my window, let's go ahead and remove this one by coming up here to the little menu, coming down and hitting remove options. I can also get rid of the add widgets menu by coming up here to the upper right. And now in order to find mine, we can actually come over here to my chart window. And if we were to look up here at the top, you can see I've got the chart tab, but also the options tab. And by clicking on the options tab, we can actually see all of the options available for Google right down here below. Beginning here on the left-hand side, you can actually see all of the expiration dates available on Google, beginning here at the 14th of April and going all the way out to 20 June of 2025. If you were to look to the right of that expiration date, we can also see the number of days until expiration. So in the case of 20 June, that is 801 days from today. If we were to actually come back above and click on one of these expiration dates, like in my case, I'm going to click on the 14 April expiration, you can then see that that opens up a list of the available strikes right down the center. So here beginning at 102 and going all the way out to 111. Now, in order to expand that list and see even further out of the money, we could come up here to the strikes menu in the upper left-hand corner where it currently says 10. By clicking on that, we can then find and click on the number of strikes that we wanted to see right here in this menu, or we could come down below and just type in a specific amount. So in my case, I'm typing in 14 and then go ahead and hit select. We can now look to the right and see that 4 additional strikes have been added because now it begins at the $100 strike and goes out to the 113. You probably also noticed that all the call options are over here on the left-hand side, while all the put options are over here on the right-hand side. You can also see right up here at the top these little column headers describing what information is being displayed down below, and if we were to look down below, there is actually a lot of information down here. But if I were to look at these column headers, it tells us exactly what that information means. So from left to right, I can see the current bid and asking price of that option, and then the Greeks, delta, gamma, theta, and vega. But that's really going to be everything you need to know about the option chain within here. Now, when it actually comes time to place the trade itself to buy the butterfly spread, there are basically 2 different ways that we could do that. The very first method is by simply clicking on one of these options down here below to build out a very simple order ticket. So to begin with, let's say I wanted to come down here and begin with the 105 puts. So I'm going to begin by simply clicking on the asking price of 55 cents. That will then immediately build out an order ticket down here below to simply buy that 105 put. And if that was all I was doing, this is where I could put in the number of contracts I wanted to buy, the price I was willing to pay, and then I could just hit place order if I was ready to place it. But in our case, since we didn't want to do just a single leg trade, a single option trade, in order to flip this over to a butterfly, let's come back up here to the order ticket and look on the far left-hand side to the strategy button. By clicking on that, we can actually see a list up here above of all of the different spreads that we could create within Webull. And in our case, we're going to find and click on the one marked butterfly. And as soon as I do that, you can actually see the additional legs get added to our trade automatically. So up here at the top, it describes the overarching trade. This is going to be a butterfly. But down here below are each of the individual legs needed to create this trade. So just going through this slowly, if we were to begin at the top here, we can see we're about to do a butterfly spread on Google. The 3 strikes are going to be the 105, the 106, and the 107, which means this is a 1-point wide butterfly. It's going to be on the 14th of April expiration. On the put side, I'm only going to be doing one of these butterfly spreads, and it looks like it's going to cost me a total of 13 cents or $13. Now remember, in this example, we're going to be putting on the 105, so we're going to be buying the 105 put. We're going to be selling 2 of the 106 puts, and then we're going to be buying 1 of the 107 puts. So like I mentioned at the beginning, this is kind of like combining 2 vertical spreads into one. If we wanted to break that down one spread at a time, it's kind of like we're buying the 107 by 106 put spread while simultaneously selling the 106 by 105 put spread. So what that means is our absolute max profit can only be reached if Google closes exactly at 106 a share. And in order for us to see the max profit or max loss in that situation, let's actually come down here to the graph icon in the lower left-hand corner. And right here, we can see a little visual representation of our risk and reward on this butterfly. So up here, we can see the 3 legs that we're going to be putting on. We're buying the 105s, we're buying the 107s, and then we're selling 2 of the 106s. In that case, we can see this little pinnacle up here, this little pinnacle at exactly 106 a share. That would mean us getting $87 in profit. If you ever wanted to calculate that max profit on the butterfly yourself, it is simply going to be the width of the spread, so in this case $1, minus the premium that we paid. And I think we paid 13 cents for this. So in that case, simple math being $1 minus 13 cents means 87 cents. And because each contract represents 100 shares, that's really going to be $87 per butterfly. Now on the flip side of that, if Google were to close below 105 or above 107, the absolute most amount of money we could ever lose is going to be that $13 that we paid for it originally. So you can see here, if Google is above 107, we lose 13 bucks. If it's below 105, we also lose 13 bucks. Now, if you wanted to adjust the width of this butterfly, we could do so by coming over here to the right where it currently says width, and by simply hitting that little plus sign, you can now see it is $2 wide. If I click on it until it becomes 5 points wide, we can now see the new max risk and max reward right here on this risk profile. So now right here with a 5-point wide butterfly, it looks like this pinnacle, this max profit potential, is if Google were to close at exactly 110, and if that were to happen, I could make $310 on this trade. Now on the flip side, if it were to go really far against me, above it looks like 115 to the upside, I would lose 190 bucks. And if it were to close below 105, I would also lose 190 bucks. Now, I could have also adjusted those strikes by coming back over here to the table, and right up here at the top where it says my little strikes menu, if I were to click on that, right up here above, I can also adjust the width of the strikes as well, and then up above actually pick my strikes right here as well. So there are a couple different ways to do it. Now, besides that method, if we were to delete this out of here, there is one other way that we could create this butterfly spread within Webull, and that's by doing it all at once. So by coming up here to the upper left-hand corner where it currently says single, if I were to click on that, and down below actually look at all of the available spreads within here and simply find and click on the one marked butterfly, you can now see all of the potential butterflies on Google are right here in the center of the screen. So if we're to come down to the at the money options, it looks like this one would be the 105 by 115 by 125 butterfly. And if we're to do it on the put side, it looks like it'd be probably buying it around 250 bucks. And since this spread is 10 points wide, I know the most I could ever make on this thing is going to be about 750 bucks. Now, if you wanted to adjust the width of the spread, because I don't know if you noticed, all of these spreads right here are 10 points wide. But in order to adjust that, we could come up here to the width in the upper left-hand corner, and by simply clicking on that, I could then select a new width right down here in the little menu below. And in my case, let's say I want to do a 5-point wide butterfly, so select 5 in the list. Coming back to the strikes menu in the center here, we can now see that each of these strikes are now 5 points apart instead of 10. And for this example, let's say I thought Google was going to do a whole lot of nothing between now and it looks like 14 April. So in that case, with Google currently trading at 106, I'm going to come up here above and find the center strikes, the short strikes at the 106. And right here, I can see the 101 by 106 by 111 butterfly spread. And staying over here on the put side, I can see that buying that butterfly would cost me roughly $286. And in order to build that, I'm just going to click on the current asking price. That will then automatically build out the order ticket right down here below to actually buy that butterfly. And here I could also adjust the quantity if I wanted to. So let's say I actually wanted to buy 2 of these. And I could also adjust the price if I thought this was a little bit too pricey. I could always ask for a lower price, although there's no guarantee that I would ever fill if I'm asking for a better price. And I could also come back here to the graph in the lower left-hand corner if I wanted a better idea on the risk before I actually put on this trade. So right here we can see our pinpoint. We can see exactly where we want the stock to be on expiration is exactly 106, where we're going to be selling our options. And we can see right there that pinnacle, the absolute most amount of money I could ever make on this trade is going to be $456. However, looking to the left or right, we can see the worst case scenario. I could actually lose $544 if it were to go above 111, or I could also lose $544 if it were to go below 101 a share. Now from here, I could also adjust the strikes as well by simply clicking on the butterfly spread here and dragging it left or right to the new price point. So if I instead thought Google was going to be at 115 at the end of the week, I could drag this over and put my 2 short strikes at 115. By letting go, we can see the new risk profile graph. You can see right here if it's exactly at where I want it to be on expiration, exactly at 115 a share, I could actually make $984 on this thing. On the flip side, if it were to go against me, I can't even see the risk because it's so little in comparison to how much I'm getting, but the most I could actually lose on this trade is going to be $16. So for this one, it's very little risk, very high reward, but it's pretty unlikely that I'm going to be right. It's pretty unlikely that Google is going to go up $10 a share in the next 3 days. That's just not going to happen. But if you actually do place this trade, just keep in mind you don't have to hold it till expiration. You can always close it early if you want to. The only thing I will say is that butterflies don't really move a whole lot until the actual day until expiration. Even the last couple hours have a huge impact on that price. But let's just say, for example's sake, we put this trade on today, and by tomorrow, I'm already up like $200 on this thing. Well, at that point, I might say, hey, that's fantastic. I only was risking $16 to begin with. I'm already up $200. Let me just close it out and take that profit off the table. So that is something you can absolutely do. And remember, you would just be closing out the entire butterfly. So since we bought it to open it, you're going to be selling it to close it. But I know that's a lot, and really this covers just about everything you'll need to know to create your own butterflies within Webull. Hopefully you now feel at least a little bit more comfortable with the process. I know there's a lot I only covered briefly, so if you are looking to learn more, consider checking out this video next. You might find it helpful as well. Otherwise, have a great rest of your week, and I'll see you on the next one.